Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the Australian dollar to the United States dollars. And first, we shall be talking about fundamental analysis before we move right down ahead to technical analysis, which is going to be purely what we'll be seeing on the chart. First off, we can notice the Reserve Bank of Australia, RBA, decided to go ahead as planned with tapering its bond purchases for AUD 5B to AUD 4B per week, and seeing the economic setback as only temporary. AUD USD drops towards the 0.7400 zone after spiking to the 0.7470 zone. An initial reaction to the RBA policy decision, but the Aussie is set to return to its pre-announcement rate over the course of the trading day, according to an economist on the ING. Asset purchases to continue at AUD 4B per week, where the RBA asset purchase policy was previously going to be reviewed no later than November, having been reduced to AUD 4B per week pace from AUD 5B at the July meeting. It's now going to be kept at AUD 4B per week until at least mid-February 2022. And this, of course, is a marginal change. Perhaps the most interesting bit of the RBA decision is the explanation for the changes to their policy. And these included that the recovery would likely be delayed by the Delta outbreak. Previously, the RBA had remained fairly upbeat about the prospects for a rapid bounce back from the lockdowns. And markets have not been, too phased by this decision. The AUD initially spiked stronger on the announcement, but has since shot weaker, given how marginal these decisions are in reality. We would not be surprised to see the currency revert to its pre-announcement rate over the course of the trading day. So right now, moving on to what we have on the chart, we can see the most recent resistance zone. Currently, we are on the 1 hour time frame, and we have two resistance zones. One here at this point, which is at 0.74614, and also at 0.74570. So close to each other, and we are seeing a breakout of this major support zone and something looking like a retest to the upside. But in the books, what we actually see is a downtrend for the Aussie USD pair. So we're predicting a move to this downside, at least this point, which is at the 0.73929 zone, before a probable pullback, before a much more fall down to this new support zone. Now, taking a look at our 4 hours time frame, of course, we can see a harami, an inverted hammer candle at this point, and then a follow-up candle at this point, looking like it's gonna fall, but then a retracement, leaving it as a hammer candle. But then we know that in the next 4 hours, the momentum from the United States dollar will begin kicking in, and then a much more flush down of the Aussie dollar to at least the 0.74021 entry zone. And finally, a confirmation on the daily time frame. All throughout last week, we noticed an uptrend from 0.71129 up to 0.7455. So this is more like a retest or a pullback, but definitely going to be deep to the support zone before a probable continuation of the trend. But in general, what we should be looking out for is a long or semi-long-term sell at this point. So now calculating our number of pips if we were to make an entry to this trade. So we make our entry at this point, the 0.74215 zone, and we let the trade run up to this point, which is close to 50 pips from the entry point, which is, of course, good morning. So that's our technical analysis on the currency pair, the Aussie dollar. I remain your host, Nick. Bye for now.